Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3, 4, maybe even 5 things to pay attention to for the upcoming trading week. Now, we're going to do what we normally do, start things off with earnings, and there are a couple of big names near the tail end of the week, but for the most part, a lot of really small companies, but I figured let's start that, get the earnings out of the way. Now, there's 874 companies reporting this week, starting things off on Monday with Sienna. Tuesday brings you Casey's General Store and Dick's Sporting Goods. Wednesday, you have Campbell Soup and MongoDB. And then, probably the best day for earnings for the week, Thursday brings you Oracle, Ulta Beauty, DocuSign, and JD.com. And rounding out the week, on Friday, you have The Bucko, one more retailer for those of you tracking the retail sales stocks. Now, we focused a lot on central banks over the past few months. And of course, right now, the U.S. Federal Reserve Central Bank is going to be the most significant one. Don't worry, no announcements from the bank itself, although you do have Jerome Powell speaking a couple of times, which I did not put in the Monday Morning Must Knows this week. Why? Because we have 3 central banks reporting. And of course, if you want to see which way those economies might be headed, it's a good idea to keep your eye on what the central banks are doing. So let's start there and move on to the central bank discussion. Now, our first central bank is going to be in the Southern Hemisphere with the Reserve Bank of Australia reporting. They're expected to raise 25 basis points, as you can see here, going from 3.35% up to 3.6%. Now, they're over 1% behind the U.S. Currently, we are at 4.75%, so maybe this is a keep up with the Joneses type of market, with the Australians looking to raise 25 basis points on Monday at 10:30 Eastern Standard Time. That's 10:30 p.m. Eastern Standard Time. Moving on to our next central bank, the Bank of Canada, our neighbors to the north. You can see they're 4.5%, and they're going to keep it right where it's at. That's the expectation, keeping it at 4.5%. That will happen Wednesday morning at 10 a.m. Eastern Standard Time. And finally, one that does not have a definitive time yet. It's a tentative announcement for Thursday. That will be the Bank of Japan, which has been sitting at negative 0.1 for the longest time. All expectations are that it will continue to stay at negative 0.1. Now, any outlier, any news that maybe you'll see a deviation from that negative 0.1 could create some huge waves for the Japanese yen. And we have started to hear a little bit of dissension from some of the Japanese economists and politicians saying, hey, listen, we might need to start modifying our policy here because it just hasn't really been working. Now, of course, Japan doesn't seem to be having any inflation issues, which is incredible considering a negative 0.1 interest rate. Now, let's shift our focus over to the U.S. markets. I'll talk about Jerome Powell's statements about the unemployment rate, but let's first look at the data and when this announcement is coming out. Now, our unemployment numbers are going to be coming out pretty soon. That's going to happen this week, Friday at 8:30 a.m. Eastern Standard Time. Now, I've gone all the way back into 2015 just to show you what this looked like. You can see back from 2015 to 2020, it was a slow decline in unemployment. That's a good sign. It means strong economy, a lot of people out there working. And then, of course, the pandemic hit, and we had this massive surge, huge spike in unemployment. But the good news is, for everyone, that it has been drifting down. And we can point our fingers to the politicians or to the Federal Reserve or just easy money and stimulus, but we are getting back down towards those lows. Now, actually, we have exceeded those lows that we were back in 2020. If we zoom in a little bit, though, I want you to see something interesting here. I am one of those people that I really do enjoy watching what the politicians say, not only the politicians, but the economists and central bankers, to get a feel for the pulse of what's going on with our economy. Where might we be headed? Now, you might remember back in August of last year, 2022, Jerome Powell was at the Jackson Hole Symposium. It's an annual event, major economists around the world, and usually Jerome Powell has a big speech. At that event, he said, expect pain. Expect unemployment to rise. It's not going to be comfortable. Really just dropping the hammer, if you will, saying, hey, things don't look very good and it could get ugly. Now look at this chart. Can you tell me where unemployment has started to surge? Well, here's the arrow popping in to show you when that statement was from Jerome Powell. We really have not only seen it not increase, we've actually seen unemployment numbers decline. Now, why is this so significant? It's significant because there's certain things that prevent the Fed from being more aggressive. If we saw a surge in unemployment, then the Fed would say, hold on a second, we can't really be raising rates much more, right? They want to raise rates to fight inflation, but if unemployment's rising, they got to walk this fine line of, well, how much do we raise? And I don't want to hurt unemployment numbers, and I want to make sure inflation is in check. But if unemployment continues to slide, and we are really at historic lows, 3.4% is an incredibly low unemployment rate. If that number continues to decline, it actually frees up the Fed to be more aggressive with raising rates. And we've recently saw a shift. There was this rumor that we weren't going to see any rate increase in our Fed funds futures in the March Fed meeting. Well, all of a sudden that jumped to, well, it's going to be a 90% chance of a 25 basis point increase. All of a sudden, that has dropped to about 70%, and now you're seeing more people talking about a 50 basis point increase in the Fed funds futures rate at our March meeting. Now, that is, of course, very important for the markets because the higher that Fed funds rate gets, the more it constricts money supply. It starts to choke off companies' ability to borrow because money becomes more expensive. And the domino theory and things just keep going there with regards to the Fed. So anyway, keep your eye on that unemployment rate number. That's coming out Friday at 8:30 a.m. Eastern Standard Time. And that, my friends, is your Monday Morning Must-Knows. We'll see you next week.